Good afternoon, traders. This is Christian from Market Trade Group, and it is Tuesday, February 16th, not Monday. I know I've been doing that all day long today, but today is Tuesday. We had off yesterday, Monday. Risk disclaimer in front of you, everything that we're going through is for information purposes only, not giving out any recommendations or advice. Also, if the screen that you're watching looks blurry, it is because YouTube has not rendered it in high def. Give it a little bit more time. I also put this spreadsheet screen print on my Twitter handle. So you could view that as you're viewing the video if it's not in high def. All right. So there's a couple quick things. So I would say theme of the day. Obviously, again, we were off yesterday, but we had a little bit of a gap up and some fades going on, depending on different areas of the market. So, the thought behind the always the gap up and the fades is this happens quite a bit, right? And I sent out a tweet last night on Twitter just talking about this, and some people actually, it got a decent amount of attention, and some people were like, "Hey, thank you. I didn't really know that that's how it works." Other people just argued about it. So I'll talk about that in a second, the tweet that I sent out. But this is typically what happens. I know it's very difficult. And listen, I didn't do this on Friday. I didn't add exposure on Friday, close of business. But it is what it is. It's just how the market works. Over time, there's just more money that's made in the after hours market. In the overnight market for the overall indices. Not to say that it can't be done in single stocks, right, to find entries and so forth. But when you're looking at the overall indices, they make the majority of the move in the after hours market. So you have to kind of balance that, right? For instance, the one trade, I run three different programs at Tribeca Trade Group. So for example, if you go to our TTG resources tab, and if you go into our programs, right? Right. So this one program, right, for the weekly watch list, I buy SPY. I substitute out of our watch list, right, our watch list trade, which I hold throughout the week. And I substitute out of that and I go into SPY at 3 o'clock on Friday and I hold the SPY over the weekend. So when I started this program, I got so many questions about this. Well, what if this happens with SPY, or what if this happens with the market over the weekend? I'm like, guys, it's just the relationship. Over time, the market goes up in the after hours market. So we have I put a chart in here which was from 1993 to 2013, right? This is what the market does regular hours, 9:30 to 4 o'clock, right? This is the percent. This is the percentage gain, right? This is what happens outside regular hours. Now, the issue with this, and I talk in detail about this probably once every 3 months, but I know traders think that they don't have control holding in the overnight market. They think something bad is going to happen because that one time that they held a stock overnight, it was downgraded and they lost money in the after hours market, and they use that as a benchmark. Or something happened back in 2013 when there was a concern about China weakening their currency, and people are scarred by that, right? Those are the outliers, right? Same thing with for a couple months back in 2020, the market was selling off, right? So I could show you this in terms of what Sentiment Trader has put out, right? So different time frames. So again, this is going back since 1993, right? This is the session of what the S&P does, between 9:30 to 4 o'clock versus the blue line of what it does in the after hours market. Now, again, this is what I was talking about, 2020, right? So it's important. So there's a couple takeaways from this, right? Number one, I think that you should know this relationship of where most of the returns happen in the S&P. It just happens. It's just the way it works. Rather than try to discredit it, and some people told me, "Oh, well, this is because of this presidential candidate or blah 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 the last couple of years." No, this is the relationship for over, going back to 1993. I didn't even start my career in 1993. I started back in 98, 99, right? So that's how long this trend has been intact, that the money is made in the after hours market. So why fight it, right? Or now say, oh, another bunch of responses that I got was, oh, well, anything could happen going forward. That's true, but it's really tough to argue with something that has been going on for over 25 years, right? Day in, day out, day in, day out. You do have these corrections that happen, and the market will correct in the after hours market too. But over time, this is the relationship. There's just a lot more money that's made in the after hours market, right? So, a couple things, and I'm going to retweet this later because people also said to me, which is also a good point. Well, if you just buy and hold, you could capture both lines, right? And you could see that the red line is positive, but it's just not that positive, right? But yes, if you buy and hold, and somebody said, hey, can you post what it looks like to buy and hold? Well, that's just the SPY chart. So just look at the SPY chart, right? But again, so why did I send this out last night, right? What prompted me to send that out? Well, because the S&P was up 60 basis points, and I see so many people putting out, hey, this is a bullish setup in this, and this is a bullish setup in that, and everybody's so amped up because they didn't trade on Monday that they're ready to take on the world Tuesday morning. And I'm saying, what I said in the TTG pre-market session is, I'm a seller in the first, and definitely in the first half hour, most likely in the first hour of the day. Why? Because you know that when the market gaps up like this, there is more of a chance that they're going to come in and take profits, right? And a lot of things. So here's what I did, right? And I had a nice profitable day today, right? Even though the market was down. Why? Because I had the game plan, and I know that this relationship holds over time. Don't argue with it and say, oh, well, this is because of this happened last year. No, this is the relationship. So when you get a gift, right, over a 3-day weekend, when the market's up 60 basis points or even more than that, or 0.5%, take your profits on the open. Right? You don't have to take all the trade. You don't have to take your whole trade off. But many of the things that I did, not Goldman, because Goldman and the banks and some of the value areas rallied pretty decently today. But I'll tell you, look at some of the things that I sold on the open. Right? We'll go through a couple of them. APPN finished down on the day. Right? So I managed to sell, and I could have sold some of these in the pre-market too, but where's APPN? I sold at 235. It closed at 222. Right? Do you see that? Right? Same thing with Teladoc. Where did Teladoc finish for the day? Right? Finished down on the day. It went up to 308. Right? So I got 303. I didn't get the 308. That would have been nice to get the 308. Right? But do you see locking in the profits on the gap up? Because I'll tell you, this is not like some people are like, oh, it's a rug pull or whatever. This happens over and over and over and over and over again. You have to be a seller on the open, not looking to, you could look for a couple new trades on the open, but odds are you're going to be met with, more often than not, some disappointment. Right? So that's why so literally, like, I try to help people. I do. I'm not trying to win an argument or anything like that. But there was a lot of people that came back and said, hey, thank you. Like, I didn't know that there's so much gains that happen in the overnight market. So the reason why I put this out there is so that you could take profits on the open on a gap up day, right? Not try to establish new trades. Right? So this NCNO worked pretty nice for me too today. And that's why I do these videos too. These videos are free. Sure, I plug TTG in these videos, but I spend 20 minutes every day going over these things, and I try to help. Right? I mean, I really do. I try to kind of go over the day. It helps me to kind of organize my thoughts for the day at hand. Coming for tomorrow, but. These things, and I do get a lot of good feedback about how these videos, help. And I tried it, so, I didn't try a trade first, and when I do buy everything, you notice starter, right, I'll leg into some things, right? So XBI was down, by the way, one, two, three, four, fifth day in a row, fifth red candle, right? And now coming back and retesting this level, and there's some support coming at 156, and it did actually close right at the 20-day moving average. Now, this could be a little bit because of what's going on with interest rates, right? So, that got a lot of attention, right? The move picked up, the velocity picked up here in the bonds, right? You could look at TLT, which is a little bit different duration, but I like to look at the long bond future. Notice that we have this very weak bounce in the beginning of the week, right into resistance, right? I was saying that everybody was talking about rates going higher last week when actually bonds were going up. So remember, bonds, this is a chart of bonds, and as they go down, right, there's an inverse relationship. That means interest rates go higher. Right, so this was a decent move today. This is 1.3%. I've said all along that I'm not really that concerned with the level of interest rates. I'm concerned about, because again, we're basically just back to where we were in the beginning of 2020, and nobody was really that concerned about interest rates then. But people get focused on when there's big moves, right? People don't like shocks, right? And right now, it's a decent move. 1.3% is no doubt a decent move, right? And again, if we look at this in the weekly chart, right, this is the first signal that we got. We kind of opened up the year below value, right? So we are trending lower. We're trending lower in bonds, meaning rates are going higher. So again, it kind of got felt a little bit by the home builders, right? The home builders kind of ignored this last week for the most part, right? They were strong. They really rallied when bonds were going up a little bit, but higher interest rates are not great, especially when they move quickly. You know, and you could see what happened to the home builders today. They were one of the worst performing groups, right? So, this will be. I didn't add anything to this group, but it's something kind of I'll be sifting through the next couple of days because everything gets hit when this happens, right? And sometimes you could find some nice relative strength. You can find some gems when everything kind of gets hit, right? So AZEK didn't matter. That was up 1.7%, so that's relative strength. But a lot of these home builders got hit pretty decently. Lennar was down 4.6%. Right. So let's go back to the themes that I have. So steel, banks, dirty energy, XLE, XOP, those things did pretty well today. Right. So banks are. So we talked about what gets hurt by rising interest rates. The banks, right, which now have broken outside of value. XLF did see a lot of call spreads that went up today, right? So if I bring up option flow, right, a lot of spreads, right? Out in April, the 33-35 call spread looks like was bought for 50 cents. So they can make the width of the spread is $1.50. The width of the spread is $2 minus the premium paid they're looking to make $1.50 out of this spread if XLF continues to trend. Not a bad trade. You could also just buy these outright, right? If you like XLF, right, and the top holdings in the financials, which is important. I went long Goldman last week. That paid off for me today, right? So that trended. Also JP Morgan looks pretty good. Morgan Stanley. A few other names saw repeat call activity into strength. You could argue whether or not that's strong. That's smart call buying. Schwab is kind of coming into top of value, but was up 4.7%. I also like Morgan Stanley, but it's got to get outside of value for me, which is above 76.70. Right, so that's a big thing. And then the industrials. I went long some Boeing. I tried Boeing a week ago and it failed. Right, but it didn't go too far, so I put the trade back on today at the 50-day moving average as well as the top of value. I like when those line up like that, right? Somebody asked me about Delta today too. The airlines, we're starting to see those reopening type trades work. Delta had a nice move today. I still think I don't trade the airlines too much. I think they've always been a difficult trade for me, but making a nice move there. right? What else works in the industrials? The rails have been making a nice move. We talked about that, I think, on Friday, right? UNP added to some gains. NSC was up right at the top of value. I was actually looking at CSX, and I'm like, I thought about taking a position. Also, we're seeing some materials stronger, right? Alcoa. I looked at this name today. I did not take the position in SCCO. I didn't like that candle for the day, right? Another copper name, right? And then steel names very strong today. U.S. Steel, which saw call activity, first move inside values and right at the 50-day moving average. So if you want to try a more value type name, so this one trended, right? This one started up and closed up 12% for the day. My favorite name in this space is RS, but it does report this week. This is Reliance Steel and Aluminum. But yeah, this group was very strong. So again, a little bit of a value rotation. Not everything. Even the pot stocks were still hot today. They were up 9% today. The blockchain stocks were still up today. They were up 5%, even though they sold off a little bit throughout the session. But steel, banks, oil, metals and mining, right? XOP was up 3.6% today. Those were your big areas, right? What didn't perform well? Well, your clean energy stocks. Those sold off 4% from the open. Solar sold off. We talked about the home builders. We talked about biotech as well. Again, some of these things, biotech, I think my guess is biotech is going down because rates are going higher. Right? They're a heavy growth area. Right? We didn't talk about the small caps either, but they finished down 60 basis points, but they were they were leading in terms of the indices coming in. So a level to watch for IWM is right here, 225. We didn't talk about the S&P, but here's your 1 hour chart. This is the value area for the week. I would watch this area, in the overnight market and possibly tomorrow. Don't really want to see that break 225. What about the S&P? Right? S&P kind of gave us some levels to watch here. Right? We're kind of consolidating here. There is a level that lines up on multiple time frames. There's this VPOC down here at 39.16. We did not take that out this morning, right? And that also lines up pretty well with the top of value. I think the way that I kind of traded today, I'm thinking that that I'm more positioned if we go a little bit lower. I converted a lot of things I increased my cash balance, I should say, today. Sorry, just trying to find the right wording for that. So you can see all the selling I did in the first half hour. I took off this trade, wasn't looking right. I took another target in MP. Right, so here's out of this starter. I held XBI, and like I said, I added BA. I did take a target in BA. I took back a target that I took last week in Open. I took off CrowdStrike. I took a target on this. Took my second target in this up here. Right, so I got that one around the highs of the day. And I did structure, an easy way to play FUTU. So I got a target in that one. Another thing that's interesting is we're seeing some put buying, in different areas, like the Chinese Internet ETF, which I talked about that last week. Right, I talked about how it's stretched. Right, so you have to be careful. I should not say that. And again, I'm not telling you any advice or recommendations, but I have to be careful, in my opinion, when I see something get overbought like this. Right, and I was kind of going over some charts in the Q&A session today. Is this a chart that you want to be taking some profits, or do you want to be starting a new position in Chinese Internet names? To me, right, first of all, the trend is beautiful, but it's a little bit extended. It is extended, right? The RSI is at 79. So I'll show you the put buying that we saw in this today. Maybe nice if you are holding some names, China Internet names, and you want to keep holding them, but you're a little bit afraid that there might be a little bit of a correction. Right? Something like this, which was a buying opportunity, right? Went from 93, to 86. Why this won't let me bring this up. So I would show you. There we go. These were the March 94 puts. They were hit a couple times, right? This is buying, right? So people are buying a little bit of protection, right? So that's a nice way if you want to stay in some Chinese internet names. That's a nice way to kind of hedge, to put on a cheap hedge. Right? You're buying 94, which is down here, and if this starts to really come in hard, you should get rewarded in that, right? But you will need a decent sell-off, and check back to the 20-day moving average. But that's kind of how my thought process is, that I'm looking at this point for some things to kind of, especially like in the growth areas of the market. I went in when we talked about in the Tribeca Trade Group macro video that I sent out on Sundays, I talked about all the areas that were extended, right? There's a lot of areas that are, especially in the growth venue. There's a lot of areas that are extended. I wanted to talk about this name really quickly. This EHANG Holdings, right? Take a look at this move today. Now, again, I'm not trying to scare anybody. I don't try to do that in these videos or anything like that. But I'll tell you, somebody came out, like, a short seller report came out on this name, and it put the name from 129 down to 46. So why do you think that happened? Is it because they're horrible and it's a bad report? Or do you think that some of these names just have a lot of fluff in them, right? There's a lot of names that have gone up just based on a story, right? It sounds good, but we really don't know, especially Chinese internet names, right? EHANG, right? This is a China name, focuses on aerial vehicle technology. But we don't really know anything about this company. It sounds good, doesn't it? So yeah, Muddy Waters or Wolfpack, right? So if some company that you may or may not have heard of can issue a report and the stock falls 62%, number one, I think you want to be looking, as always, right? You should always be worried about your risk. You should always be looking over your portfolio and how many names that you own that are story type names, right? Or they call them, I guess some people call them meme stocks too, right? Some of these names, it's just a story. And if something negative comes out about the company, this could happen. I'm not saying it's going to happen, like this is going to happen with a lot of names, but just an example. Right? It's not fun when you're in a name like this and you buy at 100, 110. You're not even, but you didn't even buy at the highs, and it falls to $46. Right? So I think the reason why I'm going over this is because know your risk. Know what you're holding, and also your position size. Right? So it's very important. You could participate in some of these high flyers, but I think position size. You have to know what you're getting yourself into. And it's very difficult. I've said it now for weeks upon weeks to really put on a big position in any of these things, because they can come down just as fast as they go up, even faster. All right. So I just wanted to provide that context to you. Overall, we'll just kind of turn back here for a minute. I'm not really going over too many trade setups other than like Boeing and a couple of I do think that my gut says that I want to be positioned a little bit more into value than growth right now. Let these growth areas, remember, in my view, it's a constant constant push and pull, right? What happens when names go up vertical? Well, it invites some profit taking, right? Those profit takers take that money and they put their money in other places, like the industrials or the rails or the financials, right? So keep that in mind. It's not necessarily a rotation under the hood is not necessarily a bad thing. It's just kind of how the market works. Okay, so that's how I'm kind of thinking, and you could see again how many things that I kind of took off here throughout the beginning of the day and throughout the session. I just said, hey, let me get out of some things like a CrowdStrike. I've made money in it. It's now coming back to my original entry price. Fine. All right. So that's it for today's video. I think, as always, just in summary, it pays to look at, some of the best investors out there. They're always worried about how much they could lose before that, how much they can make. Now, I had a nice profitable day today, so I played the game correctly for now. So, if I can make some money by doing things like selling on the open and finding where there's relative strength in the market, then I'm that much ahead of the game. So, and plus we've had a really nice February. We're already at what's today? Today's the 16th of the month. We've got 2 more weeks and we're done with this month. So, all right, guys, have a great night. See you tomorrow.